One person today I wanted to talk to. I said, I don't know, Paul, 1, 2 a.m.
Sure.
Get Nordvig.
Yep, get him on.
Jen Nordvig's with us.
Wake him up.
Legendary, with a phenomenal book on Europe, hugely prescient a decade ago, and he joins us today on Japan. Jens, thank you so much with Exante Data for joining us this morning. What are the ramifications for the people of Japan and their government if yen weakens out further, 120, 125, dare I say to 130, and new trade-weighted weakness?
Yeah. Well, the yen has already weakened about 10% really over the last month, so it's a pretty significant move already. And clearly, if you're importing oil or importing anything, those goods will go up dramatically in price, right? So those are the effects that people will see. That said, Japan is a different country from almost any other country in the world in that they have not had any broad-based inflation pressure yet. Japan is a country that's been stuck in mostly deflationary environment.
Yeah, but Jens, just because of time, and Paul Sweeney wants to jump in here. I agree with that they've been stuck in a disinflationary, deflationary trend, but on a nominal GDP basis, they define zombie. How zombie is the zombie this morning?
Well, so what we're seeing in the yen is just very, very dramatic. We've not seen yen moves like this. I frankly can't remember a weakening move like this in my entire career. So this is something we have not seen before. And what I would say is so interesting now is that the Bank of Japan has been trying in different ways to maximize essentially the amount of easy monetary policy they deliver, right? And the last formula they came up with was the yield curve control, fixing the 10-year yield. And what is so kind of ironic about that policy is that when global yields are under upward pressure, as we are seeing everywhere in the world right now, they actually get forced because of the yield curve control to buy more. And the Bank of Japan had to announce overnight that they were buying an unlimited amount of Japanese bonds at an auction. So you have this ironic situation when the need to ease is going away, kind of, they actually have to do more. It's a pro-cyclical policy, and that's why the yen is getting really interesting now and having an explosive move.
So, Jens, I mean, when I grew up, the yen was a safe haven. Is that still the case in any regard? So
I think over the last month or so, we've seen just a dramatic reassessment of what the yen is and entails, right? So a lot of people have a type of yen hedge in their book. If something goes terribly wrong, we're going to make a bit of money on having yen calls in our portfolio. Those yen calls essentially didn't work at all when you had the Russian invasion of Ukraine. The yen was just stuck, right? So those calls were worthless. So I think part of the reason why the yen has then turned to become so weak is that there's a structural reassessment of whether it's worth owning that insurance policy. So people are getting out of that insurance, and that, in the process of the adjustment, entails actually selling the yen.
Okay, we're going to sell the yen. I get the dynamics, but I want to talk about the lessons we can learn in the West from the zombification and now this huge first derivative move of yen weakness. What has Europe learned from it where you wrote your authoritative book?
Well, so I think one thing we've seen in Japan, right, is that the financial sector has really been suffering from just a yield curve with no motion at all. There's been very little bond trading in Japan for a while since these policies introduced. There's a lot of different banks that have been into serious trouble, the regional banks, right? So having a yield curve that is entirely stuck, entirely flat, has some serious costs to it, including financial stability issues in the regional banks.
Yeah, we're going to run out of time. Is this our MMT experiment? I mean, is Japan the test tube for newfangled theories on monetary policy that perhaps suggest they don't work?
I think what we're learning here is that pure inflation targeting is a policy that can really be causing significant trouble, right? You need to look at financial stability too. And in Japan now, they are facing an issue around stability of their currency that they've been not faced for really a decade. And that's going to create a change in how the Bank of Japan is thinking, I think.
Jens, at short notice, thank you so much for the clinic today. Jens Nordvig with Exante Data.